Hello there, Dana here with your options trading video and recap for the week of May the 5th. This particular week, we had an opportunity to take advantage of a channel trade. So that's what I'm going to demonstrate today. A channel trade opportunity on SPY. As you know, SPY is the S&P 500 ETF. It is one of my favorite tickers to trade. But this channel trade strategy certainly can apply to any other ticker, as long as you do your research and your back testing. So let's go through it. On your screen, you see SPY on the day time frame, and you know what that means. Each candlestick represents 1 day of price data. You see that we had a channel that formed, a nice upward channel with a width of about 12. And you know that dollar amount is important because we need specifics when we're trading options. We need to know exactly what dollar amount we are trying to capture. So we've got the upper channel. It measured about $12 in width, but that channel needs to be well defined. So when I'm looking at that channel, I see exactly what I'm looking for. And those are specific touch points where price would touch resistance, which is the top of the channel, and then begin to decrease. And then I've got touches at the bottom of the channel, which is support, where the price of SPY would move down to the support and then turn around and go the other way. So that's what I'm looking for. And it gives me an opportunity to plan this trade. So with this data, knowing that the channel is $12, I can identify my entry point. For this channel trade, my entry point would be a call entry if SPY touched the bottom of the channel. So if SPY moved down to the bottom of the channel and touched it, I'm getting into a call. The reason I'm buying a call contract is because we have an upward channel and I want to take advantage of at least some of this $12 price movement. I also need to know my target. My target, at least the first target, is a very conservative target. You know, from my earlier trade recaps, I tend to take the conservative exits because I like to lock in my profits as soon as possible. So, target one for the channel trade is the midpoint or the median of the trade. So, I said we had an upward channel of $12. So, this is at least going to be a $6 amount that we're going to try to capture. So, let's see how this trade unfolded for us. 3 days after I identified the channel, I entered the trade. You see here at the bottom, I actually jumped the gun a little bit. SPY didn't quite touch the bottom. I'm a little bit early, a few pennies early, but it's all good. I bought enough time. I purchased the 562 strike price, a call contract that expired on May 9th. When I entered this was 4 days of time for this price to meet its target. Why did I buy 4 days? It's based on the research and the back testing. If you take a look at this channel, all I had to do was take a look at, on average, how many days did it take for SPY to move from one side of the channel to the other, and then I add some more days just to give me a little more cushion there. So let's keep going and see what happened next. The next day, which was on Wednesday, we did not quite reach the midpoint, so I'm still in the trade. And here we are, Thursday. May the 8th, we reached the midpoint and surpassed it. But according to my rules, I'm out of this trade. At this point, my contracts were selling for approximately $801 per contract. So you can do that math. This trade, after only holding a couple of days, you are in profit over 120% return on your investment. Whether you bought one contract or you bought multiple contracts, you are in profit well over 100% return on investment. The takeaway here is you have to know what you're looking for. When I say trading an upward channel, you have to know what makes a well-defined channel. If you're not clear about that, please click the link in my bio for more resources and information, because what I focus on is objective evidence-based trades. I specifically look for certain parameters in the channel. If those parameters had not been met, I would not have entered the trade. Likewise, if my stop loss had been violated, you need to know your stop loss. If that had been violated, I would have been out of this trade. So you have to know your rules, know what you're looking for, stick to your rules, don't be impulsive, and then also know your target and your exit. I hope this has been helpful to you. If it has, or if you found any value, please like, share, and subscribe. and check out the resources in my bio. Until the next time, take good care. Goodbye.